All right, guys, we're going to look at technical analysis on the major markets. I'm going to start off on the weekly chart. And a big shout out to Mark for handling the videos last week. My name's D7 here at Grok Trade. Been trading in the live markets a long time, over 2 decades, using technical analysis. And we're looking at the weekly charts. I don't care about the dailies. The last couple of weeks have been going straight up in the markets on decreasing volume. And look at the weeklies. You'll same thing. We're up. This is a daily, actually, a daily on the spider. See how we're up there? We busted over a major trend line. Now it's acting as support. The problem is the volume is going down. Very, very low volume. If I pull up my algorithm here, you'll notice there's a sell signal up here at this area. If, in fact, it goes below that trend line, that's the symmetrical triangle. If it goes below that, that'd be a death hook. That'll come crashing back down. As long as it stays above that trend line, all is well, and the market should continue higher. However, I got a crossover in the MACD heading down. I also have a relative strength that's on the upper echelon, but not bad. But on my trading algorithm that you can get at groktrade.com, it has a sell. So it gave us a sell signal in that red candlestick a few days ago. So this is, if you're going long at this moment, you are taking a risk. So if I go to the weeklies, because that's what I want to do here, the weeklies are here, because everything is really starting to spell out in the weeklies. So last week, boom, to the upside, symmetrical triangle breakout. We do have a doji on the weekly chart, 4-day weekend here, or a 3-day weekend here, 4 days of trading, and we doji out for the week on the spiders, the S&P 500. You'll notice we had a sell here, and we did drop. We did not get a buy here, but it did go higher. So we got the buy back here, which was there, and then we continued higher. This is on the Grok Rock. The question is, will we stay above this line or will we come crashing back down? Next week is so important, guys, and Monday through Friday, if it's a very bearish week and we close back below this line, big time bearish. Look for the next couple weeks to be very bearish. We'll come down, find support there, and then break through, and it'll be a nasty drop. We're going higher there on decreasing volume. Okay, higher price action, decreasing volume. In the MACD on the weeklies, getting ready to cross over. We got a little small histogram there telling us that we have a really good chance of it crossing over and then dropping. If it drops below the zero line, that'd be bad. And by the way, you guys gave me some great responses from the last video I did, because I really took a 101 step-by-step, very basic approach to the markets, and I think you guys liked it. So I need to continue to do that, and if so, just let me know if you like it really, really basic, or if you like the speed and me just throwing out the high-level stuff. It'd be interesting to see how many say why there in the comments. Now, this is the spider, so symmetrical triangle. We didn't hit support. We got close to it, so it told us that was relative strength. It did break out of this apex, and we should see follow-through. More times than not, you'll see a big follow-through to the upside. Jury is out. If this thing turns around quickly, that's your death hook, and this will be a nasty little sell-off. The diamonds, you look at this, we haven't got to resistance. We haven't broke through resistance yet. That's where we're at, but we are just a step above moving averages there. We have decreasing volume. We're on the zero side. We're on the negative of the zero side, so we're below that zero line. We're below it. Histograms are getting smaller, meaning the lines, the MACD and the signal line, are getting closer together. In other words, it could cross over. If it crosses there, that means this is going to continue to drop down. I don't have any signals on buy and or sell there. The Q's weekly chart, again, we're looking at weeklies. If you look here, we had that breakout 4 weeks ago, big breakout, boom, to the upside, and then boom, we hit this trend line. And then last week, we went boom above that. This week, we do a stutter step. We have what's called a tweezer top with a bearish harami. Guys, this is a 2-par candlestick reversal pattern to the downside. That's more bearish than bullish. If you look here, we had the MACD going up, getting ready to cross over. We have a negative tick. We already crossed over. Negative tick on the histogram. We have a sell signal, big fat sell signal. If we come up and we break down, look for it to get down to this line really, really quickly on the weekly chart, really quickly. So the Russell's 2000 IWM, it's very different than the rest of the markets. This, instead of having a symmetrical triangle breaking out, the small caps have broken down. Last week, we tried to get back above that trend line. You see it? We tried to get back above it. but we come dropping again. That's no bueno, guys. Even though we have 2 buy signals here, this week this was problematic, very problematic. So it'd be interesting to see, will we continue down next week, or will these buy signals hold true, and will we heal itself and get back up, be a bullish death hook where this thing could rally straight up and blast through. Very, very interesting times. I mean, I'm throwing a lot of different things. That's how the markets have been last 10 months. Last 10 months, guys, we've just been chopping sideways. Look at a monthly chart. It's just been up 1 month, down, up, down, 10 months solid. Very, very choppy, very hard for swing trading. Very, very difficult. And we have a lot of indecision. I had a 401 student, not a 301 student. 301 student are Grok grads. But we're talking about the ones that take in our higher education mentorship, which I'm doing here in May. So for all you 301s, I'm doing a 401. I only do them about once a year. So it's coming up like now if you want to get in on it. But I had him say, man, Des, I've been sitting on my hands, but I've been sitting on my hands for so long. I don't know if I'm missing the markets here. And I said, my friend, you are not missing the markets. If you look at a monthly chart, we are just chopping sideways. Being in cash is a smart place to be unless you have trading algorithms helping you navigate these times. Okay, so let's keep going. Let's keep going. Now, if you look here at the financials, I also look at that symmetrical triangle break down to the downside, a little pop to the upside here last few weeks, but that is no bueno. That is bad news. That is problematic. This is a trouble, saying that what we're seeing in the markets is we're going to get a death hook. Because why? Now let's talk about this. Let's go to the spiders. I want you guys to follow me. This is the spiders, S&P 500. A death hook is anytime you got a symmetrical triangle, you break out above, and it should just boom to the upside. But instead, what a death hook does, it goes boom to the upside just a little bit, and then it comes crashing back down, breaking down below the line that was resistance. It didn't act as support. It breaks that support. And what you will see is a follow through and then a breakdown. More times than not, it's very powerful formation. You won't find death hook anywhere on the interweb. I promise you that. This is a term that I have come up with. And it's a pattern that nobody talks about. You'll have heard it here if it plays out like I'm thinking so. So if the spiders, okay, are breaking out to the bullish side, so symmetrical triangle, we're in the apex, we broke out, it should stay above this area and trend higher, okay? That's what it should do on a symmetrical triangle, break out, okay, to the upside. What I'm saying is we have leading indicators also on the weekly charts, okay? If you look at the Russell's 2000, those are deemed more risky because they're smaller cap stocks. Because they're smaller caps, they're more risky. For that reason, they will sometimes, people will sell those first before they sell the more secure blue chip stuff like in the S&P 500. So we had the 2000, Russell's 2000. It has a symmetrical triangle, but this dude broke down and has popped back up here. So here's, so it's showing relative strength to the downside, okay? So this is a relative weakness, okay? It's relative weakness compared to the rest of the markets. It's dragging everything down, okay? Now, the financials really helps tell the tale because the markets are only as strong as the financials. All right, let's go there. So the S&P is breaking out. The diamonds and Qs are breaking up. But we have small caps breaking down, and we have financials breaking down of these triangles. So if those truly act as leading indicators, meaning the financials and the small caps, the Russell's 2000, if they are truly leading indicators, then we are in trouble going into the future. Meaning that the S&P 500, if it drops, it will do a death hook. And to follow out what that death hook is, it breaks out, it makes these promises, and it breaks the promises, and it comes crashing down, and it breaks your heart and your everything. You lose a lot of money if you're caught in that and you don't know how to navigate that environment. So what did I say there? Markets are showing us on the weekly charts that we are going higher. It's saying we're breaking out. So we had a breakout of the tech stocks. See this? This broke out several weeks ago. Diamonds haven't broke out yet, but they're coming close. It could, but we're at resistance where people want to sell, not buy. The S&P 500 already broke out. What has not broke out? What showed relative weakness? Relative weakness was on the small caps. There it is. It broke down and chopping around at the downside below all major moving averages. Russell's or the financials broke down below support line, and now it's the resistance line and below all major moving averages. Have big red coming across is finding support on that at the very moment. So we are in perilous times at this moment. Perilous times, guys. Very dangerous times. Next week, if it's really bearish, that's going to be bad for the markets. U.S. dollar is at major support on the weekly chart. Major support. The question is, will we find support and will we bounce here? This is the time it has to bounce. If it doesn't, if it breaks down, this dude is going to break down from a this trend line has been hit multiple times. If it breaks that, look for the U.S. dollar to sink. Don't get me started on my problems I'm having with the economic side of things about the U.S. dollar. I was interviewed by a financial group. Guys, if you have a podcast about finance, I'm happy to be interviewed. So just so you guys know. Anyway, the gold broke out on the weekly chart. It had to break out, came back, and then boom, it's doing very well. The problem is we have a bearish divergence on the MACD. We're overbought on the RSI, and we're getting ready to get a sell signal. If this thing drops back down right here, we're going to get a sell signal on the algorithm, the Grok algorithm. So just be careful with that. Silver, if you look at silver, had a big breakout, boom, to the upside, looking really good. So again, we're in this symmetrical triangle. It pulled back and had so much strength it could not get to that support line and rallied up, broke through last week, looking good this week, really going up. The problem is this is a higher high. This is a lower high on the MACD. This is already making, even though I'm really early to the party here, guys, this is making a bearish divergence, which is no bueno. And if you look here at the RSI, we're overbought at this moment. And we're getting ready. On the Grok, if it turns down, we're going to get a sell signal. We had a buy signal right here, and then we're getting ready to get a sell signal right there. Okay, so those are some things. The VIX, if you look at the VIX is down. Guys, the VIX is just barely above 18. There's no fear out there. So the markets are set up for fear to spike. We're relatively we're down quite a bit here. And we're at major supports. So look at this supports on the weekly chart. Major support here. So on the weekly chart, will we bounce? Will we bounce? If so, if we bounce, the markets come crashing down. That's the long and short of it. So I hope. I wave my hands here to let myself to know, hey, this is when I'm done with the charts. Then you guys can leave, because I go into my own droning and my own monologues. My wife's in the office with me, and she has done something amazing. I don't know what has gotten into you, but she wanted to learn how to trade herself. She's always said I wanted to take the courses and stuff, but she's like, I really want to get into it. So Janelle, she went through the 101s, which anybody can go through those. You can find those at Free Online Trading Education or Grok Trade, with very little help with me, meaning that if she had any questions, she came in the other room and asked me, right? So that's to your benefit. And then she started the 201s, which we give our mentor students before their education, before their training. And then she jumped into the last month's mentorship, which is 3 days on Zoom with Mark the Meerkat. And how, Janelle, how fried was your brain after going to the 301? Here, can you come over here? Please come over here. Hey, do you want her to come over here? Yeah, see, they're all saying yes. just please. You look great. Come on. So you took the, you can't see yourself, but just come over here. Here, you want to say here?
No, I'm good.
Well, no, just,
So
they want to see you.
It was good. It was really, really good.
Okay.
It was a lot of information, but it was a lot of good information.
Yeah.
My head was spinning.
Why did you want to take the 101s?
Some of it is just, quite honestly, just in working with you, hearing the lingo and the terms and all of that. I wanted to know what you're talking about.
Fair enough.
But yeah.
She didn't know she was going to be on camera. So anyway, it was just it was neat to see somebody who has very limited information on trading going through our program from scratch. That's as close to me as obviously she is, and it was neat to see. And so anyway, it was just it was fantastic. If you want to jump in on the classes, feel free to do so. We even have broke out, like we made 4 different packages. So depending on what your specific budget is for education, we're trying to make it where anybody can join and anybody can get this, because we have this thing that we're like, everybody needs to have this level of foundational education before they should be trading and earn their right to trade in the markets, and to do so with responsibly. So we're very, very passionate about that. So anyway, we're trying to make it where anybody can be a part of this. Anybody can go through it and pick a package that's right for you, and feel free to do it. Just go to Grok Trade, go to Mentor, and you can learn all about it and find out if it's for you or not. But anyway, that was very, very cool. And I'm telling you guys, the trading algorithms, if you're a little techie and you're not afraid of technology, it is easy. Watch the tutorials, but go to the algo section and watch that video and be part of the algorithm. It makes trading so much easier when you are having the use of AI supporting you, helping you know when to get in and when to get out. And it's super fun to hone in the numbers, to tweak the numbers to get better performances. It's immediate gratification and very fun. So that's it. If you like it, like it. If you like it. We like the likes. So thank you. Feel free to leave a comment. I love those. As you know, I try to respond to many of those as I can. Catch you guys later. We'll see you. Bye. Guys, why are you still here? You're supposed to be gone while I still have you. If you haven't joined the 301 mentorship yet, seriously give that some serious thought. Mark the Meerkat's been trading a long, long time in the markets. As you know, I have too. We take people under our wing and we teach you what we do to trade in the live markets. We trade a significant amount of money on a day-to-day basis in the live markets ourselves. If you're going to learn from anybody, learn from us. It's the 301 mentorship program. We've been doing this a long time, and we're happy to help you. The algorithms, that's a no-brainer. Get in on that. Let the algorithms help you down the path. Education with specialized knowledge with trading algorithms makes you unstoppable. There you have it. Now, get out of here.